All right, I'm very pleased to say we are joined by Rebecca Walser, President Walser Wealth Management, and she's joining me around the desk here on the floor of the New York Stock Exchange. Thank you so much for your time.
Thanks for having me.
Happy Friday.
Happy Friday.
And it's a happy Friday for the market.
Yes, a happy Friday for the market. Yes.
Yes, okay.
Exactly.
So we've got some green across the screen off the back of what was a not surprising PCE report.
Yeah.
Does that set us up for 2 cuts then?
I think so. I think that there's nothing in this data to make Powell think that he needs to be more hawkish. And so obviously he was definitely saying in the last 2 speeches that we've heard that he's more tilted towards the labor markets instead of inflation. But if inflation started to really, if PCE started to really come up, if we saw CPI come up unexpectedly a little bit more for the month of August. So if any of those things happen, I think he would have to make more of a balanced threading of the needle. But this is definitely leaning towards more cuts.
Okay. A big week on the jobs front next week as far as the data that we'll be getting. Do you see any sort of threats to that narrative as far as constraints, as far as, the pricing in of these 2 rate cuts for the rest of the year?
Well, I think that the labor market wants rate cuts. It helps employers, right? It lowers costs. It helps employers go out into the market. But, one of the things that Powell even talked about and that others have alluded to is that a lot of this labor problem is the fact that we don't have immigrants coming in, that the actual border has been closed. So even in the likelihood of more reduced and cheaper credit, more easy credit, if that's the actual issue, that's not going to get fixed with, cuts. So we're going to have to really see what happens these next couple of months.
Yeah, it's a labour supply issue that obviously is factoring into that overall unemployment metric. Just wondering, let's talk about the markets, because we got a little bit of a reality check, you could call it, just in the last 3 sessions or so. I mean, we're recouping some of the losses today, but I believe we could still end the week lower. We've got a lot of talking about the frothiness in this market, even Fed Chair Jerome Powell weighing in on this sort of overvalued story. I mean, how do we trade our way out of this if you've got the Wall Street banks are still upping their targets for year end?
I know. Everyone's going to like these 7,000 plus these numbers, and it's a little bit crazy. I'm glad to see when the street prices it to come a little bit not so aggressive.
Yes.
Powell is hedging his bets, and what he's basically saying is, I know Wall Street would love to have cut. They would Wall Street would love to swim in easy, cheap money as long as they can. That makes R&D cheap, labor cheap, everything cheap. But what he's saying is, I might not be so accommodative for you because I think valuations are a little bit overheated and frothy, to your point. And so I think what he's trying to telegraph is, don't expect the Fed to be the wind in your sail. Like, AI is going to have to carry its weight as it monetizes on its own, and it's not going to be because of accommodative Fed monetary policy. I
mean, so far it's been doing that, simultaneously alongside a lot of these rate cutting expectations, but we've got a cut now.
Yeah.
So what's the next catalyst? Is it the earnings?
Well, I think it's monetization. I think as we see actual monetization beyond chatbots, beyond just how can I write a better paragraph, as we start to see things actually really implicate and interject into our daily lives. An example would be, hey, if I can go check out in my e-commerce, cart with Apple Pay or stablecoin, then we're starting to see actual monetization of blockchain, of cryptocurrency, of all these things. And until we see that, I don't know if that's going to happen anytime soon with stablecoin, because we're still looking for another law to be passed for the regulatory framework. But the Genius Act obviously was a big start to that, which basically said if you're going to be a stablecoin issuer, you have to 1-for-1 have in reserves either U.S. liquid dollar or treasurable marketable T-bills.
You've got to credit the market with being so patient with that whole monetization story. I mean, they've been asking for a long time, right? Show me proof of all that spend, and we continue to hear these sort of eye-watering numbers being thrown out there. But to your point, not that much proof just yet. So how long until that question becomes a problem, do you think? Or how long until we start to see evidence of that?
It's an excellent question, and this is the question that we should be honing in on. So it's 2-part answer. The first thing is, if you go back and look at the one example that we have of a technology frontier, implementation, monetization of that, it's .com. And everyone wants to say, oh, it's not similar to .com. Okay, fine. But let's go back and look at what happened at .com. Alan Greenspan's irrational exuberance speech was given in 1996. We didn't get the .com bust until 2000, 2002. So it preceded it quite a ways. We are getting monetization now, but it's just beginning. And this is completely different. This is a new way to do everything. And I literally mean everything. Driving, writing, eating, shopping. Everything is going to be affected by AI as it monetizes. And so it is going to be a long, long runway. But I would expect in the next 36 months, things will start to look unrecognizable for how we're doing them right now.
Okay, and then obviously the big wild card is these tariffs, and we've just had more announcements this morning, so we have to keep tabs on that. Rebecca Walser, it's always a pleasure. Thank you so much for joining me here.
Thank you.
Have a fantastic weekend, and we'll see you next time. Okay, Rebecca Walser there, President Walser Wealth Management, joining me.